Failure at trading is not your fault. Or is it? And what can you do about it? Let's get started. Before we get started, if you're not on my free email list for algo trading information, well, you should be. Just hit the QR code, type in the address you see on the screen, and you'll get signed up and you'll get this free mini S&P algo strategy. All right, well, let's first talk about why trading failure is not your fault, because there's a lot of forces lined up against you when you start trading. And the sooner you realize that these things are there, the better equipped you can become to take care of them. So the first one is the whole game of trading in general. Especially in the futures market, there are trading costs. And there's a price to be paid for those. And what I mean by that is just take any futures market and slap some kind of moving average crossover on it without slippage, without commission, and chances are you can probably get it to work and be successful. But as soon as you apply slippage and commission, real world costs, any kind of edge or any kind of profit that you have just disappears. Now you might say, well, hey, in stocks I can trade commission free, but realize there's a price to be paid for that. Because professionals are getting in front of you and they're taking a little bit of money from you. You might not realize it, but you've got to realize that you're playing a game where it's kind of rigged and set up against you. And you could be a very good trader, but you've got to overcome these costs right off the bat. The second thing is the competition. You're not up against a bunch of retired dudes in pajamas, okay? Well, I mean, they're part of the market, but most of the market is young people who are creating algos and creating high-frequency trading and PhDs and all these people who are devoting their lives to making money. And they're working for hedge funds, they're working for private investors, they're working for the big guys. And you've got to realize that everything you do in trading, you're going to be up against those big guys. So you're not playing against weak competition, you're playing against really strong competition. And the way to think about it is you're an amateur, and you're playing against pros. How good do you think you'd be if you were playing pro football or basketball or soccer and as an amateur up against the pros? You probably wouldn't do that good. So the competition is a big reason that you fail, because a lot of times the big fish, the powerful traders, they're taking from the little fish, and that's usually the retail traders. The next one is the whole industry in general. And this goes from brokers to computer software. The whole thing's just kind of rigged against you. I'll just give you one example. Open up your trading platform and pull up a chart and put a strategy on it. And then what happens next, or what is really easy to do? It's usually really easy to optimize that strategy, right? A couple clicks, and you can test breakouts from 10 to 50 and see which one worked the best historically. And then in your mind, you think, well, hey, that'll keep working. You see that beautiful equity curve. But the problem is that almost never works. That kind of approach is terrible. And by default, most trading software just is set up that way. And it kind of encourages you to do those bad things, to over-optimize. That's just one example. But another good one might be the day trading margins that are available for a lot of futures markets. What does that encourage? Well, that encourages people with small accounts to actually trade. and to be over leveraged. And what ends up happening most of the time is when you're over leveraged and you don't have a big enough account for what you're trading, you're going to get blown out. I've seen day trading margins so low that a couple points here or there movement, which is normal, can wipe out an account. So you've got to realize that the industry, in part, is set up just to churn accounts and to keep people coming back. It's kind of like a gambling thing. And, people say trading is sort of like gambling. There's a lot of parallels here. But you have to realize that the whole industry is set up to really separate your money from you. Okay? It doesn't happen to everybody, but it happens to a lot of people. And another reason why people fail at trading and why you might have been failing and might be failing are all the scammers that are out there and all the unrealistic expectations. I kind of lump those things together because they go hand in hand. You'll be browsing YouTube or Facebook and an ad will pop up of how much you can make and guaranteed returns and trade 5 minutes a day and make hundreds of percent and all these crazy expectations that you think, after you see them for a while, you think they are possible. You're kind of becoming brainwashed. And if a lot of people fall for this, and I'll admit, I even see these ads and see these things and say, whoa, well, maybe there's some truth to that. And maybe even if I got a third or a fourth of what they're doing, I'd be doing pretty good. Maybe I should take a look. And you start to believe these things because you hear them so much. But the reality is there's a lot of trading scammers out there, people promising the world and not delivering it. And there's a ton of unrealistic expectations, just things that you feel are too good to be true. They probably are. And that's the way to think about it. Well, if you like what you see so far, you're going to love my free Algo strategy and more trading information. Just hit the QR code or type in the address you see and you'll get signed up to my email list and get lots of free Algo trading information. Okay, so those are reasons why trading failure might not be your fault. That's just the way the industry is. It's just the expectations that you see in ads, those kind of things. But there's a few reasons why trading is your fault. And trading failure, I should say. The first one is looking for a quick fix. I can't tell you how many people email me with either desperate stories, I'm 68 years old and I'm going to retire and I have no retirement savings. I just want to make a second income trading and I want to start next month making that income. Or people saying, hey, I'm young and I want to double my money every year so I can retire by the age of 30 or 35 or something like that. People are looking for a quick fix. And if you fall into that category, you're going to be sadly mistaken with trading. Because trading, for 99% of people out there, is not a quick fix. You can use it to get wealthy slowly and slowly build up your account and use the compounded annual rate of return. They always say compounding is like the seventh wonder of the world or whatever that saying is. And it really is. If you're trading and you're reasonable and you're not looking for that overnight success, and the overnight success is what you see out there a lot, but if you're looking for more long-term, well, that might be one reason you're failing at trading. You're looking for that quick fix, and you've got to stop that. Another big key is psychology and emotions. Money brings on emotions. Simple as that. So anytime you're gaining or losing money, it's going to mess with your psychology. It's going to mess with your emotions. And you've got to realize that. And there's people out there with algo trading, for example, who say, oh, hey, just algo trade, just let the bot do the trades and you'll have no emotions. It's 100% false. As long as you have real money on the line, you're going to have emotions. And you've got to be able to handle the psychology of trading and the emotions that come with it. And what are those emotions really? Well, my experience is the biggest one is just the fear of dread because you're in a drawdown. And the reality is, even if you're a good trader, you're going to be in drawdown a lot of times. You're going to have trades that go against you, maybe temporarily, maybe forever. If you don't get out of them, there's going to be weeks where you're down. There's going to be months. You could even have years that you're down. That's all part of it. But being able to live through it is psychologically, emotionally really hard. But that's what you got to focus on is how do I survive these drawdowns? And part of that is having confidence in what you're doing. If you have confidence, then you'll be pretty good. And I kind of jumped ahead a little bit, but what can you do to turn those failures into success? Well, the first thing, hopefully, just based on this video, you've realized that this is a tough game. Trading is no get rich quick. It's no easy thing. Like anything else, if you want something that's of value, you've got to work hard to get it. Trading's no different. It's a tough game. Most people lose. Doesn't mean everybody loses. But if you go in with the mindset, hey, this is going to be hard, this is going to be a challenge, but I'm up for it, you're going to be much better off. Second, you've got to make a commitment. Anything in your life, think of your career, your spouse or significant other. And probably at some point you've made a commitment to that person, that career, that job. And making that commitment drives you, and it helps you succeed at that. And trading's the same way. If you want to succeed in trading, you've got to make a commitment to become a successful trader. It just doesn't happen by reading a book and playing around on a simulator. You've got to take steps. And commitment is where that starts. And the last thing is you've got to find your approach. For me, algo trading works really well. But for other people, it's awful. And I know there's people who fail at algo trading. And they go on and they do something else. And maybe they find a different way of trading. But the key, I mentioned earlier, was confidence. And in finding your approach, when you find one, you're going to find one you have confidence in. And that is really important. Finding an approach that you have confidence in. So those are reasons why people fail at trading and why you might have been failing. Some of the reasons are outside your control, some are within your control. But in any event, there are things you can do to overcome them. So start today, focus on becoming a better trader, and hopefully things will work out for you. Thanks for watching.